So corporations are very easy to fold and disappear.
Yes.
And they're gone. And so they have to make sure that the person individually can afford the property, and that's how you buy real estate. Welcome back, everybody. We're back with episode number 5, part 2, and Dimitra is back from the barbecue. Darren is still here. No one's run away.
Thank God nobody's run away, especially with we had the barbecue back on fire again, right?
A little bit of a fire, but that's okay.
But,
so
yeah, it happens.
Okay, so you made the salad so quickly, and then we just got into conversation.
That's okay. Well, in salad, I mean, Greek salad it could be anything, okay? Like you don't have a set recipe. This time we use lettuce, cucumber, tomatoes, feta cheese, and I love my feta cheese from the Greek store because it's smooth, it's not as salty, and it's like completely different than what we buy at a Canadian store. Okay. And it's not anything more expensive, but if you know, it's easy to buy at any store, including the Chinese stores, right? TNT or, you know, Highland Farms or, you know, Metro, Loblaws.
So feta is sheep?
It's cheese. It's traditionally, yes, sheep cheese, right? But it could be made, yes, it could be made with cow or goat.
Okay. And then the olives are, did you bring this back from Greece in your last trip?
Actually, this is a friend's company that I buy a lot of his products, and this is one of Kalamata Greek olives. Costas, you know.
There you go.
You know, and they're preserved not in brine, but rather in olive oil, and the olive oil, you can actually use it on the salad. So we're going to use that olive oil when we toss our salad together. And we're gonna need some salt, pepper, oregano. Remember the oregano I brought from Greece? Yes. So, and that will complete the Greek salad.
What's in the oven?
In the oven is potato wedges, right?
Are we ready to pull them out?
Yes, we are.
Darren, do you do the honors, or you want to
No, I think we'll let the,
I think Dimitri's already shown she's had some problems with fire. Let's just
actually, yes, fire is not my strongest.
So we had a fire on the grill, but we saved I was going to say save the turkey, but we saved the rack.
The lamb. Oh, you put them up here, yeah, because they're hot, right? So with that being said, let me squeeze a bit of lemon on the potatoes.
And then you made a rack of lamb on the barbecue?
Yes, and we're going to need some squeeze of lemon on that as well. So, you know, lemon is our staple in my family and in our Greek cuisine, right? So, okay. Who's going to do the honors? Lemon, squeeze it on, and on the potatoes. And we have more here if you want more.
So the rack of lamb, you did it on a barbecue.
Yes.
You purchased it at
actually I purchased it at TNT Chinese market.
Okay, awesome, awesome.
Hey, whatever works, right?
Yeah.
I mean, they do offer, this is frozen.
There. I like it, yeah.
Right, and they have a variety of foods, and it's easy to find a lot of things. Okay.
Sorry.
Oh my God.
Tell Dimitra what she missed when she was cooking outside.
Yes,
So Dimitra, we were like most people, they want to buy real estate, and they're like, oh, I want to buy in a corporation.
Yes.
So because I'm going to save taxes. And the truth is that because it's passive income, they get charged 50.75%.
50.17.
Seriously?
So there's no bonus of owning a property in a corporation.
So you can buy as an individual as many properties, and I think we touched on that last session, right? Yeah. As many properties that you can afford, or the bank is going to loan you as much money as the bank is going to loan you, right? Okay, that's awesome.
And this is the conversation we were having earlier about getting financing. Like, as much as the accountants can do the paperwork to show that you can afford it, and the mortgage broker works with the accountant and the buyers to get everything done, there's somebody at the desk upstairs called an underwriter, and they're having a bad day most of the time, so they'll easily reject. And so it has to make sense, and we talked about this earlier. Like, why didn't they do this? This doesn't make sense. This doesn't make sense. The truth is that the underwriter is looking at the risk assessment. So corporations are very easy to fold and disappear.
Yes,
and they're gone, and so they have to make sure that the person individually can afford the property, and that's how you buy real estate.
You know what? In the my old advertising days, we always used to say the accountant killed the deal. Nowadays, we can say the underwriter killed the deal, right? It has nothing to do with our accountants. Right. So we can, obviously turn into you for advice and for, how to manage our monies and buy new properties, right?
Definitely.
Okay, so, and your number and what's the company again?
Our company's called Murphy & Chung. We're located in Scarborough, but we service the GTA. Been around for 70 years, so...
70 years?
70 years,
Is this one of those things that's like 70 years combined because everybody's worked 10 into 70 people?
No, actually, firm actually has been around for 70 years. I have not been there for 70 years.
No, of course not. You're way too young. You're like what?
Yeah.
Barely 16?
Okay. Still get carded occasionally at the LCBO, but no,
Good,
a little more than 16. But yeah,
Awesome.
firm's been around for 70 years. Full service public accounting firm. We just, do try to help people do the right things.
Yeah.
A lot of other accounting firms and law firms will push people towards incorporation and things like that because that's how they make money, even if it's not the right solution for the client. Whereas we're really sort of client focused. We only really do things that make sense for you.
That's great. Obviously you had some great information for us today, and I'm sure a lot of our clients would like to reach out to you. And again, what's your number? They can reach you at?
Yeah, so number
why not?
416-298-8868. Extension 115, you reach our lovely office manager, Samantha, who will screen the calls.
Yes.
Also at www.murphychung.ca.
Nice.
Awesome. Nice. Amazing.
Okay,
amazing.
So let's get into this rack of lamb, and then we want to continue our conversation as well. There's a lot of information here. I think we're going to be back with episode 6, 7, and 8 because there's so much information here with Darren. So we'll talk about that as well. So how do we cut this?
Okay, well, where's my trusty
Oh yeah, we have to do our special. So you have to follow the Sherif.Nathoo page and Demetrius Deals and Heels page.
Of course.
And tag 3 friends, like and share.
But today I like to introduce something more, right? Okay. I had we get a lot of traction with our cooking show. People are testing our recipes, are calling for advice. So most recently I had someone say, hey, I have a super easy, super tasty recipe. Here's my recipe. Can you feature it on your next session, or next episode? And I thought, the first 3 people or 2 people, they're gonna request for us to feature one of their recipes. Okay. They get one of our trustworthy knives, and please be careful, right?
Yes.
They're very sharp and they keep the sharpness. Okay.
We have to order more knives because we're gonna give one to. Do you have enough today?
I do have enough today.
Awesome.
Okay.
Right. Okay. So you cut through the lamb. This is Look, it didn't get burned. It's beautiful.
No, this is sort of, you can cut it through and it's like cutting melting batter. Look at this, right? Look at that. It's amazing. It's really good. It melts in your mouth.
There's no food for you, Ralph.
And anybody that wants to add salt, pepper, oregano, I try to, obviously season lightly. So, people can always enjoy their own.
I'm not going to season because then I over season. Remember, I'm not much of a cook.
And he went to culinary school, believe it or not, right?
Yeah.
So, okay.
Cool. Awesome. So thank you everybody for coming and watching us. Please like us and share our YouTube page with everybody.
Yeah,
we're going to have Darren back again as a guest. And we'll continue talking about accounting, taxes, and real estate, guys.
Of course.
So see you next episode.
See ya. Bye.
Bye.
All right, guys, so now it's the rapid fire question time, and we're using ChatGPT, and I got my lovely Vanna Sam to help me here. Okay, so Darren, what tax benefits are available to real estate investors?
Real estate investors, kind of what we talked about. You can incorporate, but generally it only makes sense if you have another business where you're generating active income and you're benefiting from the low corporate tax rates. You then use those retained earnings that you paid very low tax on to then invest.
Time! Okay, next question.
All right, and then how can I structure my real estate investments to minimize taxes?
Kind of what we just talked about, same thing. Again, big misconception that corporations pay less tax on real estate investments. Actually not true. Okay. So, the way you structure it is we generally take we take advantage of the deductibility of interest. You want to maximize your mortgages so that you can finance money out and buy the next property. That mortgage is deductible. That lowers your taxes.
Awesome. How should I account for rental income expenses?
Exactly how you just described it. Rental income is rental income. You want to maximize your expenses. We have some templates that a lot of our clients use. Excel sheets are great for that. That's the best way to do it.
I just call Sam.
Yep.
Perfect. Okay.
That's basically.
That is not Canadian, so we can say
Okay.
ours. Yeah. Nope.
I can say what?
What is a RSP and how? Okay. How can RSPs benefit a home buyer?
So RSPs, registered savings plan, registered retirement savings plans. There's called a home buyer's plan, which allows you to take up to $35,000 out of your RSP tax-free
Okay.
to buy a home, but you have to qualify as a first-time home buyer.
Okay. Awesome.
And that $35,000 or whatever you take out has to be repaid over 15 years. But it is tax-free and it's great to help out with a down payment on a house.
Fair. And then how can I deduct repairs and renovations on my rental properties?
You deduct them as an expense. So you have to be careful. So anything that is a betterment or a capital improvement, that is not considered a repair and maintenance. You can't deduct that, but you can add that to the cost base of your property. It'll eventually get deducted when you sell the property as part of your cost base. Anything that's just a repair or you're fixing something back to its original state, that would be a deductible expense.
Can you deduct HST as an expense from the repairs?
You can, because you're paying HST and rental income is exempt, so you can't claim an input tax credit on the HST, so it is an expense.
I like that question.
It's a good question.
You should ask the next question.
How should I handle depreciation on my rental properties?
So big hot topic. So you can choose to depreciate a property. Generally, real estate doesn't go down in value. Eventually, when you sell it, you're not going to lose money on it. Depreciation is usually an asset that declines in value, like a car, something like that. For real estate, you can take depreciation on it, on the building portion, not the land portion. It'll save you taxes now because it's a deductible expense, but then what happens if you end up selling the property for more than it's worth, you'll end up paying recapture, so meaning you'll pay back that depreciation or that tax break that you've taken, and you might pay it at a higher rate because in the year that you sold your property, you're going to have a capital gain and you have more income. So time value of money, it saves you taxes now, but you might end up paying more money down the road.
I have so many more questions.
I mean, it's follow up. It's the rapid fire round.
What is the difference between capital gains and ordinary income in real estate?
Capital gains is a gain on a capital property. So any property that you own to earn income from, like investment properties, you're buying the place, to earn rental income. That's a capital property. When you sell that, it's a capital gain. The benefit right now is capital gains are only taxed at half the amount as normal income. So you only pay tax on half of a capital gain, which is obviously very favorable compared to ordinary income.
Last question.
Are there any tax implications when buying or selling a property?
There are lots of tax implications. It depends on what you do. So one of the big things, I guess, that a lot of people are unaware of is that, obviously when you sell a property, you have a disposition and capital gain. Something that comes up a lot that people are unaware of is when you have a change in use. So when you take an income producing property and you move into it as a principal residence, or you have a principal residence that you move out of and it becomes a rental property, that's considered a change in use. That's a deemed disposition. So you have actually got a capital gain, even though you don't have proceeds when you change the use of a property. Now there are elections that you can file to avoid or defer the taxes on that, but if you don't file them, then you can actually get caught down the road where you didn't report a capital gain and you have to pay tax plus penalties and interest.
That's
amazing.
quite
Well, thank you, guys.
interesting. Oh my God, that was amazing. I couldn't even keep up with.
It would have been nice if you guys actually fed me the questions before.
I know, right? But you did amazing, and we're so proud of you. And also would like to say to our clients that it's just Sherif and myself, right? In real estate, we have a whole bunch of people, right? Yeah. We have a team of professionals and professionals in advising in finances and accountants and lawyers that we're able to help our clients with whether they're buying first-time home property or investments. Yeah, absolutely. So yes.
Yeah. So thank you, Darren. Thank you, Sam. Thanks for Murphy Chung for giving time to these
Allowing
two people.
us,
Wonderful to feed them. And I want to thank Alvin and Ralph and all our audience.
And everybody else. So now we can eat.
Let's go.
Sorry guys, I wish you were here to taste some and kind of get the aromas as well. So,
yay.
Ciao.